A very good evening to the gathering. On behalf of Shri Krishnaswamy College for Women, I welcome you all to the 2 days international webinar on personal financial education. I would like to welcome our Dean Ma'am, Dr. Revati, our Principal Ma'am, Dr. Anita Rajendran, our Head of the Department, Dr. J. Radha Ma'am, respected teachers, my fellow students, and all the participants. I am sure that you will feel enriched with knowledge after completion of this event. It's my pleasure to welcome our guest speaker for today, Mr. A. Vijay Kumar, sir. Welcome, sir. He is a retired director of IT, former assistant general manager of Karur Vysya Bank. He also have a life membership in Computer Society of India. He is currently associated with Vivardhana Microfinance Limited as Director, IT and Compliance. He had completed a 3 years contract with Bank of Bhutan as a head CBS. Worked with Bharat Overseas Bank Limited, Chennai as a head of IT department of bank. He have been guest faculty for RBI Staff College, Regional Training Institute Chennai, Institute of Chartered Accountant of India, and so on. Currently guest faculty for ISACA Chennai and for their programs at LIBA Chennai, Institute of Chartered Accounts of India, Southern Indian Regional Council, Information Security and Digital Forensics course at Dr. MGR University. Now we would like to hear from you, sir. Thank you.
Can I start, madam? We can start the session. Hello. Do we start? Are you able to see my screen?
Yes, sir.
Okay, fine. Right. Good evening, good afternoon to all of you. It's a privilege to be able to talk to a set of students who are really looking forward to a great career. Now, the topic I am going to talk about is something on bank scams. When I chose the topic, there was some consideration. Should I talk about scams from the perspective of the customer, meaning what you and I, as end users of the banking service, experience, like our ATM card being misused, our internet credentials being misused? Do we talk something about that? Or do I talk about the scams which affect the whole bank as a whole at a much bigger level, which hit the headlines of newspapers and all? After some thought, I decided to settle for the later. We'll talk of bank scams mainly because I thought that this will also help me introduce some of the concepts about banking, which should be quite useful to you as become students and all. Okay. So that's the basic idea. I am going to talk of bank scams. I'm going to take a couple of simple case studies and explain what happened, what went wrong, and what is the lesson we should learn from that. That's the approach I'm going to take. Finally, we will summarize it. So this is broadly what we'll do. Before we really get on to talk about scams, we also need to have some basic understanding of what is banking, what are the basic ideas behind that, and how it has evolved over the period of time. A very quick run through of what has probably happened in banking over the last couple of hundreds of years and all. We would look at that. So then we would take a small definition for bank scam. What is it that when I'm going to talk about bank scam, what is it that I'm meaning by that? What would be considered as a bank scam for our rest of the discussions and all? And then I would take up case studies. Actually, I've got 4 case studies, and each one is unique in its own way. There are a couple of case studies which relate to, out of that 2 case studies relate to India, 2 to what happened abroad. But in general, the basic things which can go wrong can happen anywhere across the country. There are lots of parallels across the countries. You have what happens in India being mirrored in different countries, or what the scams which happen in other countries getting repeated in India. Both things are there and all. So we are only going to look at some sample studies and all. And finally, I would come up with a few closing remarks just to summarize what is the main concern when we talk about bank scams. And I have put in a Q&A session. I presume it will be at the end of the session. But in case you want to do it even during the session, yes, you are welcome to do it. Somebody can raise the question and I can answer that as we go along. Let's talk quickly of how banking originated. I'm sure as students of commerce, you also have a paper on banking and things, so you should be aware of that. But what I have put in here is just a quick, a high-level idea of how banking started. It is generally believed that banking originated with goldsmiths. They were the ones who first pioneered this, because generally all over the country, goldsmiths have been considered as more trustworthy people, meaning somebody with whom you can give your things in confidence, saying that it will be given back to you, or they would maintain it for you on your behalf and give it to you when you require it and all that. They had earned that trust across different sections of the society. So people generally used to keep the spare money with these goldsmiths. And over the period of time, the goldsmiths realized one golden rule. They realized that although a lot of people were giving them money for safe storing, all the people were not asking for the money, all their money at the same time. If 100 persons had deposited money with the goldsmith, with a particular goldsmith, not all 100 of them are going to ask him to return all the money, meaning reduce everything, reduce their balances to zero to them. They found that only some people ask for some money at different points of time, and some people may occasionally claim the whole money. So that is it, which essentially meant that although more than hundreds or thousands of people would have deposited money with them, only a few were transacting, and so they needed to keep only a little bit of money always ready to meet their requests and all. That is how the whole idea of a banking came up. So when they realized that only a part of the money is required for meeting the requests of all their depositors, they decided to use it for the remaining money for the alternate ways, meaning that they started giving it to other people who were needing money and they were collecting interest on that. That's how banking is said to have originated, which in my opinion sounds quite logical. So let's take a quick idea over the bank concept, what kind of services they offer. The core service of the bank, as what we saw in the previous slide when we discussed about how it started, the core service is accepting deposits and giving loans. Most of the work of the bank is in this category only. They take deposits from individuals, from societies, from trusts, from associations, from business people, from government entities, and use that money to give loans to people who require that. The basic idea being that all those depositors are not going to ask for their entire balance at the same time. That is the basic interest. If that confidence is not there, if for some reason people lose their faith in that bank and then all of them start claiming the money at the same time, then the bank would find itself in serious difficulties because it would not be able to collect back all the loans to repay them and all. So that's the basic idea. The core activity of the bank is to accept deposits and give loans. And of course, there is an interest differential between the two. They traditionally give a lower interest on the deposits and claim a higher interest on the loans. That obviously the margin is what goes to meet their expenses, like the operating, like paying salaries, paying rents for the buildings, the electricity bills, the computer maintenance charges, and also to some extent for the loans which do not come back, which turn bad. All these things are met out of that margin. In addition to this core activity, they also offer a number of other ancillary services. They provide the facility to transfer money from one place to another. That's what we call as remittances. In the earlier days, we used to have what are called bank drafts or pay orders to do this. And today we have online services to do the same thing. And then they offer trade finance services. Trade finance services essentially mean that they are able to connect a buyer and seller of goods who do not know each other but who are located in different locations, and then help them to settle the transaction. They give assurance to the seller that yes, you will get the money, and they give assurance to the buyer, yes, you will get your goods and all. So this is done through what are called bill collection and bill negotiation. The bills raised by the seller are handled through the bank, and then they are able to do that. and in the process they may also finance the bills. So that's what we call as trade finance. And as an offshoot of this, banks also issue what are called letter of credits and bank guarantees. The letter of credits are mostly predominantly aimed at settling customers settle trades across countries, across borders. So somebody in India exporting, let's say some handloom exporter in Erode wants to send his goods, sell his goods to somebody in Germany, then the letter of credit comes in handy. It gives an assurance to the seller that yes, I will get my money although I do not know the buyer. And the buyer will also get the comfort, yes, I will get the goods because the bank is supporting me through this letter of credit, and they will pay money only if the goods, the title to goods are transferred to me. So that's what we mean by a letter of credit. Similarly, banks also offer guarantees. For example, somebody is quoting for a tender, so he has to deposit some money for that. So instead of that, they can give a guarantee. Or somebody has to buy a house and he has to pay in advance for that. But before he can do that, he can give a guarantee saying that I will pay this money on such and such date. The bank would give the assurance that it can be paid. Those are bank. Of course, for all these services, bank would be charging. Then they have the foreign exchange services, meaning they sell dollars, they buy dollars from customers. They do it in other currencies also. All these are done through the banks. So these are the typical common ancillary services other than the core service of deposits and giving loans. There are other services also. Banks accept keep goods in safe deposit. You can leave letters, bills with them, or you can deposit something like your house keys, duplicate keys there. You can keep them, or some valuables you can deposit them there. You can hire lockers from the bank to keep your valuables. You can have the banks carry out treasury operations, meaning they use their surplus funds to invest in the securities market, meaning in the share market. I think you had a session yesterday about that. So you can they invest this money in the share markets, in the securities, in government bonds, in treasury bills, and all that. So that way they do not try to minimize their idle funds and make more income out of that all. They arrange for loans. A big let's say a big manufacturer is setting up a huge factory, and for that he needs a very large amount of loan running into a couple of thousands of crores. Then they can arrange for that loan through a set of banks. They can coordinate with a set of banks and arrange for loans, each bank pitching in with a small with a portion of the total requirement. That's what we call as loan syndication. They offer merchant banking, meaning they help companies float shares, meaning initial IPOs, public initial public offers. Then they can manage rights issues for those companies, meaning to existing shareholders, the companies are issuing new shares then at a different price, and this can also be managed. So these are the different types of services which the banks offer. So from the initial days of the goldsmith just taking deposits and giving loans, we have come a long way now. We offer a multiple set of services. Any questions? Anything? Am I audible? Is the pace okay, or should I talk a little faster or slower? Can I have some feedback? Is it okay? Fine. Let's, madam. If there is any disturbance or anything, please give me a feedback so that I know that things are okay or I am falling behind somewhere. Fine, let's go ahead. We'll take a quick look at technology. This next 2 3 slides we'll talk of how technology evolved in the banks, and but this technology evolution which I'm talking about is broadly focused on Indian banking scenario. Although there are lots of similarities between how the systems got evolved in India and abroad, I am focusing on India because that's the environment we live in, and that's the banks in India with which we deal with more often. So I have concentrated on that, mainly because this also gives you a good idea of how the country has itself has been progressing over the years. Okay, so in the case of India, till about 1980s, all operations are manual. I remember when I first joined the bank way back in 1975, the banks had only ledgers and ledgers and books and books and vouchers and vouchers. Okay, so we had to huge ledgers having hundreds of pages or sometimes 500 pages, which we had to really literally lift and put on the counters and use them and all that kind of a thing was there. Only thing is, in the foreign countries, this manual operations, they continued probably till a little earlier, till about 70s it was there that way, or even about late 60s it was there. After that, they went into the computerized operations. So we had manual operations till about 1980, and the main problem with that was there were a lot of backlogs when the customer statements could not be given in time, statement of accounts giving list of transactions in their account. They are supposed to give it every month or every week depending upon the customer's requirement. They could not give it on time, it was not legible. And then the reconciliation, meaning matching transactions happening across different branches, that was not happening. There was a lot of backlog. All these kinds of things were there. There were complaints about errors in interest calculation, both in charging the loan customers as well as in paying to the deposit customers. And added to that, we also had a lot of industrial relations issues. By and large, trade unions in the banking industry were a little bit reluctant to accept computerization. They were reluctant to go in for technology. They were not keen on automation, mainly because they feared that it will have a negative impact on their employment. So that's broadly the scenario till we had about 1980s. Then, somewhere in the 80s, when all those kinds of issues we are talking about, the customers started complaining, becoming more vociferous about their kind of poor kind of service they were receiving, all this, that led to something called the Rangarajan committee being appointed, and they came up with a computerization. And Rangarajan committee had the delicate task of striking a balance between what the customers want and what the industrial relations would permit. So they came up with some kind of a solution which introduced something called the front office machines, or EAMs, electronic accounting machines, or back office machines. These were actually computers, but then they had a lot of limitations on the kind of speeds, storage, the kind of memory they could have, and all that. So they had very limited functionality, but then still they were the first baby steps into computerizing the bank's operations, into automating the bank's operations. Then after that came the Rangarajan committee's second report. That was about 4 or 5 years later. The Rangarajan incidentally was the former governor of Reserve Bank of India. He's one of the well-known economists of the country, and he was appointed for the second time. His committee was asked to again re-evaluate what had happened before and all. So now, based on the improvements which had happened, based on the mellowing down of the industrial relations, they came up with the idea of introducing LANs, local area networks, in the branches, which means that instead of having isolated computers at the counters, they now had a network in the branch. All the systems were linked, and there was a server which maintained the database of all the accounts in the branch. So the customer could go to any counter and do it. In the earlier uh, version, the 1980s version, the customer had still had to go to a specific counter to get his accounts addressed or not. But here, he could go to any counter and get his transactions done, because there was a local area network and any counter could access the data. And the committee also recommended putting in bigger computers called mini computers at the zonal offices or the administrative offices for MIS purpose, so that all the returns could be consolidated and the overall positions could be determined much faster. Okay, this itself was a major improvement because there was a lot of delays in getting statistics out of the banks. Then sometime in 1980s was a real turning point, both in the history of the country and in its development, as well as in banking. So around that time is when we started having reforms and liberalization, and new private sector banks like ICICI Bank, HDFC Bank, all those banks came in and all. And by that point of time, technology had also improved. India has telecom infrastructure had improved. The communication links had become more stable. They could support better speeds of data transfer and all that. So because of that, networking the branches, interlinking the branches became a viable proposition. It was cost effective to do that. So all these things brought in the era of the core banking system. So we started implementing core banking system. The banks like ICICI, HDFC, which had put in initially the computerization of the branches, the total branch automation, meaning having a LAN within each branch and connecting all the counters to a server within the branch, that was improved. That was enhanced to become a core banking solution, meaning the branches were interlinked and we started getting transactions across the branches. For our understanding, the core banking would simply mean what is shown on the screen. It means all branches are networked. The transactions can take place in multiple places, different branches, and all of them would get centralized in one location in a central database. Usually, that place used to be called the data center. So, all the transactions were stored in a central database there, and it could start in different branches. In addition to this, the customers themselves could initiate transactions. They could start transactions on the ATMs or on the PAS machines or using the internet banking. All that could happen. And the back office operations, which typically meant something like opening of accounts, calculation of interest, printing of statements for the customers, all these things could be centralized now. They were all done in one single place, and the branches were relieved of that burden. CBS also led to the introduction of self-service, self-driven services. I don't think I need to elaborate on that. All of you are already using some of these already. You would definitely be using ATMs, internet banking. You would also be using POS machines when you go shopping, all that. And we also have mobile banking and UPI-based transactions, universal payment interface transactions. All these things have also come in. All these we should remember are the offshoot of CBS. Because we have CBS and the database is centralized, it is possible to introduce these kinds of services because they can also access that central database. Now let's start talking of our core topic. What we have is a background now. We know how banking evolved, what were the initial challenges, why we went in for automation, and then what kind of services are today in place. That's what we have seen now. Let's look at scam. Scam is something which a very commonly used word. All of you should be, I am sure, are quite familiar with that. Still, we'll start with that. The dictionary definition of scam is doing something fraudulent or a deceptive act or operation. Doing something deceptively, something fraudulently is what we call as a scam. When I am going to refer to a bank scam in the rest of the discussions, we would only be adding a few words to that preliminary definition. So we would be talking of, when we refer to a bank scam for the rest of the session, it would mean fraudulent or deceptive act or operation, same as what we said for the scam. But now we are adding the rider that has caused a direct loss to a bank, meaning some illegal act, some malicious act, some fraudulent act that has caused a direct loss to your bank is what we call as a bank scam for the remaining discussions. Now, I am not looking at something like somebody losing his internet credentials and the customer losing some money, which ultimately the bank would be reimbursed if they are at fault. But then what I am looking at is something which directly hits the bank directly. They are the first receiver of the loss. That is what I am going to talk of. That is what we call as a bank scam. I hope you are comfortable with this definition. Would you require any, if you require any more clarification on that, please stop me and let me know. I'll wait for a couple of seconds for anyone to raise a question. Okay. Let me take the first case study. It is something to do with an incident or a scam which involved inter-branch reconciliation. We'll see what that means. It's actually something which dates back to the 1970s, early 70s and mid 70s, and it happened in State Bank of India. It had happened in State Bank a couple of years before I actually started my career with them. The bank lost quite a bit of money, a couple of crores of money, which was a huge sum in those days. That money in today's terms, if you account for inflation and all, must be worth a couple of hundreds of crores and all. So what happened was somebody exploited delays in reconciliation. Okay. Now, what we need to understand is what is the reconciliation, what is the reconciliation I'm referring to, and how was it exploited. When we have transactions taking place, when we had a lot of physical branches, and remember in the 1970s, it was all manual. So when one branch initiated a transaction on another branch. What do I mean by that? For example, if one branch issued a demand draft on another branch, okay, or if one branch transferred an account, closed an account, and transferred the balance to another branch, so that the customer is going to a new location he wants. So these are transactions which happen across branches. One branch is initiating the transaction, and another branch has to respond to it. So we need someone to make sure that these two are matched, meaning the transaction originated by a branch, let's say by Chennai Anna Nagar branch, on, let's say, a branch in Madurai is matched, meaning Chennai originated a transaction for 10,000 rupees, issued a demand draft for 10,000 rupees, and Madurai has responded to it and recorded that issuance of the draft for 10,000 rupees. So we need to make sure that the transaction recorded by Chennai is exactly responded to by Madurai, meaning the amounts are same, and the originating branch is also correctly shown, the date of transaction is also correctly shown, all these are matched or not. That is what we mean by reconciliation. This has to be done. That is the only way we can ensure that there are no fraudulent transactions. We cannot, that's the only way we can ensure that somebody does not pay out the money claiming they have received it from another branch. Okay, that kind of a thing does not happen. That is what we call as a reconciliation. So usually what happens is every branch sends out a list of transactions which they originated, meaning which they initiated on the other branches, and also a list of transactions which they have responded to, meaning which they have received from other branches, and send this list to a central location. Okay, usually a reconciliation office as they call it. And similarly, all the branches would be sending it, each branch. Then the central team would match all the originated entries with the responded entries, and all make sure that there are no fraudulent entries. This is the process we call as inter-branch reconciliation. If you find that there are some transactions which cannot be matched, meaning somebody has shown a responding entry, somebody has shown that some transaction has been received from a particular branch, but the other branch has not originated, then it means that there is something fishy, some fraud is happening. So they have to initiate corrective action. They will have to find out, investigate that, recover the money, and all that and all. So that is what we call as a reconciliation. And when this is done manually, there are a lot of delays. First, somebody in the origin in each branch has to manually prepare this list of initiated transactions, of responded transactions, and send it to the other. Then there are postal delays. It should reach the central site, and the one branch may have reported promptly, the other branch might take some time to do it. A bigger branch might take a longer time to prepare those scheduled statements and send it. So that itself builds a delay. Postal delays at both ends will be there. And then on top of that, these are handwritten statements. So the handwriting is illegible, or there are errors in that. Somebody writes an amount as 1,800 and somebody reads it as 1,600. All those kinds of transcription errors will be there. So because of this, there is lots of delay in actually matching. When they find there is a discrepancy, they have to talk to both the branches, get clarifications from them. Somebody in the branch has to take time off his other works, check the records, and then clarify what is the correct position. Then the matching would be completed. So because of this, there were lots of delays. So what can be done? What happened in the SBI case was, one particular group of people led by one ringleader, they posted lot of fraudulent entries running into huge amounts, saying that they have received a transaction for remittance for let's say 50,000, 1 lakh, 10 lakhs from a particular remote branch, a small branch. They would do that. These kinds of things used to happen, and the money used to get credited to somebody's account. What it essentially means is that the fraudulent entry debits one of the general ledger headings, something called as the interbranch account, and it credits to some customer's account, some fraudster's account, and the money is withdrawn by them. Typically, that's what the fraud was happening. So this can be detected only when the matching is completed. So when they find, let's say that Ahmedabad branch has shown that Chennai branch has sent a remittance for 5 lakhs. They have remitted money for 5 lakhs for somebody's account. And then Chennai branch did not do it. The money 5 lakhs would have been debited to the interbranch account, credited to a customer, and would have been withdrawn. And both the branches would report, and after probably about 1 month, the central team would start matching that. And then they will find that Ahmedabad has reported receiving 5 lakhs, but Chennai has not originated. Then they will have to write to both the branches. And both the branches will take their own sweet time to reply. and finally maybe after 2 months, 3 months, they will get some reply and Chennai will confirm they have not received it. Then the central team will wake up and realize that there is a fraud, and then they would start investigating it. So it took a long time for them to find out that there were some entries like this, and then finally when they detected a couple of entries, they started investigating, digging deeper, and got a lot more entries. So they found a huge amount running into crores of money into this. So this is what happened. This happened manually way back in the 70s, and it was a serious problem at that time. So some of the aftershoots of this, or after effects of this, or the learnings we get from this, is that automation is necessary, because the transaction volumes are growing by leaps and bounds. They keep growing from 1 year to another year to another year. And this is because the economy is growing, number of people banking are growing, the number of business enterprises are growing, the number of transactions across them are going, and people are moving across different cities, buying from different cities. All those things are happening. So the transaction volumes are increasing. So these cannot be handled manually. So we have to go in necessarily for automation. And also, we need to minimize manual, in the sense like we need to make sure that the matching is done automatically by a automated process. We should not wait for somebody to manually compare two statements and do that. So we want automation of generating the statements of transactions, and we also want an automated way of matching them. That is what is required. That is the major learning from this. And subsequent to this, SBI really introduced a computerized system, and they revamped the thing to detect such cases much faster. Are we on track? Let me check back with you.
Yes, sir. Yes, sir.
It's fine. It's okay. We can go ahead and all.
Yeah. You can go ahead, sir.
If there are any questions, you let me know, because I'm using the full screen. So if there are any questions, please let me know and all.
Yes, sir. Definitely, sir.
Okay. Yeah. You can see the screen now. Case 2, case study 2.
Yes, sir. Yes, sir. It is visible, sir.
Right. Fine. This is something. The first case, if you remember, is something which related to State Bank of India, what happened within the country. Now I'm going to talk of a bigger scam which happened across the world in multiple countries, involving different banks. This gives you a taste of what I'm going to talk about. This is one of the major headlines way back in 2013. Global cyber ATM haste nets thieves $45 million from 26 countries. That summarizes what exactly happened in the case we are going to talk about. This shows those over 40,500 fraudulent transactions took place in over 27 countries. You can see that the names of the countries are given there, ranging right from the whole map of the world is covered by that. There are a huge number of countries, including Pakistan, Malaysia, Australia, Indonesia. So many countries are involved in this, which meant that fraudulent transactions took place. Close to 41,000 transactions took place in 27 countries, and the total loss was about $45 million. That is 4.5 crores of dollars. This is one sample favor. This shows one of the persons who committed the fraud, meaning who withdrew money from a series of ATMs. This traces his path. This has been reconstructed using the camera images and things available there, and the sequence of transactions notice based on the timings of the transactions. You can see those dots across here. All these dots which you see, they are all the ATMs on which this particular fraudster did the transactions. And you also see small description of the transaction. Each ATM had only a few transactions, 4 to 5 transactions, 3 transactions, and it all happened within a couple of minutes. Okay, and they're very limited. And the individual ATM withdrawal is also limited, $4,000, $2,500, those kinds of things and all. But then cumulatively, when this kind of transactions were done simultaneously in different countries within a short period of time on thousands of ATMs, you have a huge amount. That's what really happened and all. One of the banks which really got hit was RAC Bank. RAC Bank is a Middle East bank, Ras Al Khaimah Bank and all. It's one of the national banks in one of those Emirate countries and all. This particular bank got affected on 21st December 2012. They suffered a loss of $5 million US. The bank's card transactions, particularly the cards which were involved in this fraud, were all being managed by a company in India. The company was called Electra Card Systems. It was located in Pune. And in fact, MasterCard, you must have come across the names Master and Visa, the two big card networks which issue their branded cards which are used globally, right? So MasterCard is one of those card issuing networks. They had invested in this company. They had 12.5% stake in this company. And the beauty is only 5 accounts were compromised, meaning 5 cards were used. And the whole attack took place within 3 hours, about 4,500 transactions in 20 countries. In 3 hours, across 20 countries, 4,500 ATMs had transactions, which resulted in a net draining out of $5 million from this particular bank. Okay. The second major bank was Bank Muscat. Again, it's one of the much bigger banks in the Middle East. It has got a big stake in the economy in the Middle East and all. So this bank had partnered with a company called Enstage, which is operating out of Bangalore. It's a company in which is promoted originally by somebody in India, and then in which a lot of international investors have also put in money. It is headquartered in US, but the operations are in Bangalore, meaning the data center is here, the computers are here, the databases are here and all. This company was providing the card processing services to Bank Muscat for this particular types of cards which were involved. And only 12 card accounts. In the previous Rack Bank case, we said 5 card accounts were compromised. Here, 12 card accounts, and the window was expanded. It became 10 hours, and we had 36,000 transactions in 24 countries. In fact, there is also a suggestion by investigators. They say that Rack Bank incident, which happened in December 2012, was only a kind of trial runner for this later fraud which happened in the Bank Muscat, for the later scam which affected Bank Muscat. So they tried out the initial technique in Rack Bank and perfected it and brought it to Bank Muscat, and they managed to withdraw 40 million US dollars within 10 hours. Now, what happened? They cloned cards. Now, the cards which were used for these frauds, they didn't have to go and copy data from, they didn't have to go and steal the card data from customers of the bank. Instead, they had bought valid gift cards, cards which are issued by banks, which you can buy and give it. Now, when we go to somebody's birthday party or a wedding function, we give them gifts, we give them cash. Then banks had come up with something called gift checks. Instead of giving cash, you could give the money to the bank, buy something called a gift check, beautifully decorated ones, and then give them in nice, beautiful covers to whoever is going to receive that. Subsequently, with the improvements in technology, these gift checks got replaced with gift cards. So you could pay the money to the bank, maybe 500 rupees or 1,000 rupees, and get a card, like a Visa or a MasterCard, which was branded as something called a gift card, and then you can give it to whomsoever you want to give it, to your friend on his birthday, or to your friend on his her annual wedding day or something, and then that could be used in shops to make payments and all. So that they had bought legitimately a few gift cards from these two banks, and then they clone the cards. Cloning means making a copy of the card. How do you make a copy of the card? You must have seen till recently our cards used to come with only a magnetic strip, a black strip on the back of the card. Okay, that is what used to be called as a magnetic stripe, that contained details about the card. And when you insert it in an ATM or a POS machine, the magnetic strip was red, not what kind of a picture is on the card, or what kind of a number is printed on the card, or what is the name printed. Those things were not recognized. It was only the magnetic stripe, the recording on the magnetic strip, which was read by the ATMs or the POS machines or wherever the card was used. And then based on that, the transactions were processed. So if you copy the contents of that magnetic strip, okay, you have simple tools, very cheap tools available. You can read those contents of those magnetic strip, and then you can write them onto another card. You can buy the blank magnetic cards, blank cards with magnetic stripe on the back in the open market. They are legally sold. You can buy them cheaply for a couple of rupees, and then you can use simple tools to write what you copied from the card onto this. Now what happens is you have two cards. You have a original card which you bought from the bank, and you have a duplicate card which you have created. You copied the magnetic stripe from the original card which you bought from the bank, wrote it onto a card a blank card which you bought from the market. So now you have two cards. These two cards are electronically equivalent, meaning when you put it in an ATM, the ATM has no way of knowing whether you have put in the actual original card with all those nice pictures on top, the numbers embossed, name embossed, all that, or if you have put in a copied card. It doesn't, because it finds that the magnetic strip data on the card is valid, so it accepts it. So this process of copying the contents of one card and putting it on the magnetic strip of another blank card is what is called cloning. So these people who did the fraud, they bought legitimate gift cards from those banks by paying a few $5 or $10 or something, and then they made thousands of copies of these cards. And that also they didn't have to do it in one location. They simply had to copy that magnetic stripe, send that file to their associates in different countries, and ask them to locally clone them, locally copy them onto blank card which they have purchased in the local market. So within a short time, you could get all these copied, distributed to different people. Only thing is, it requires a large number of foot soldiers, meaning actually people who carry those cards to the different ATMs, those duplicated or cloned cards to the different ATMs, and use them on the ATMs to withdraw the money. That is the only thing had to be organized, and that required enormous planning, selecting trustworthy people, and also have a very rigid system of monitoring what these chaps were doing it, what these withdrawal people were doing it, because you don't want one of those foot soldiers to withdraw $1,000 and then tell you I got only $100. So they need to be monitored. All this was done by these people, and for this they had somehow gained access to the databases of the service providers, meaning that Electra card company which I talked about, the Enstage company which I mentioned, those two companies, their systems were somehow breached, and these people gained access to that. It could have been through collusion with internal people, or it could have been through weaknesses in their system, what we technically call as vulnerabilities. Any of that they could have used. They had access to that systems, and through that they were monitoring how much money was being withdrawn on which ATM by whom. And at the same time, they also made sure that they removed the limits on the card, because these are gift cards which were bought with a definite amount, $5 or $10 or $50. The amount limit was set in the system. So if the transaction exceeds that value, it will be blocked, it will not be allowed. So these people, because they had access to the system, they removed those limits and made them arbitrarily very large numbers, so that any amount of transactions could be done to withdraw the money. That is how the whole fraud was orchestrated. It required coordination among thousands of foot soldiers. It required copying those cards, cloning those cards, distributing them, and also getting into the systems of those service providers, Enstage and Electra card, and modifying the databases. All these things happened, and that's how they lost the money. Okay, now what are the learnings from this? What do we see from this? Let me tell you that both those companies, Enstage and Electra, they were certified for their security levels. For all card processing agencies, there is a mandatory international certification. They have to necessarily get them certified by independent auditors to say that they are complying with the required security standards. That is called as PCI DSS, Payment Card Industry Data Security Standard. So they need to comply with that, and they need to get certified. So you have independent assessors. They would come, look at the way the processor is carrying on his operations. They would see what kind of security arrangements are there, and if they meet all the requirements, they certify them. Both these companies were certified, and in fact they had got recertified only a few days before the frauds happened, before the scam happened, before the ATM withdrawals happened. Incidentally, because these ATM withdrawals are in such huge numbers, they are usually referred to as ATM out, ATM cash out, because by that large withdrawals, the ATM could run out of cash. So these are referred to as ATM cash out incidents. Okay, so they were all certified, and the transactions were fully automated, meaning that the ATM talks to the central system. All transactions electronically handled, validated, and immediately processed. That automation was also there. But then what we see is both of them have not stopped scams. They do not ensure that all scams are prevented, because ultimately everything depends on something, in some weakness in the system, or somebody failing to notice something. So in this case, automation was there. It should have literally helped in early detection of it. But then what happens is the money, the transactions, the way the accounting happens, these are gift cards. So which means that the customer account does not get debited when a gift card is used. The money which is paid out in an ATM or a POS machine is actually debited to a bank's internal account. That's how it should be. That's how it is handled, and that account is something which should be monitored. Now that account, if for a gift card, as you can appreciate, it can never go into debit balance, because the gift card is first the money is accepted and then it is issued, and it will not be allowed to be used for more than the money which was deposited. So there is no way the account can become an overdraft account, meaning that the internal account should always show a credit balance. But then, because of these fraudulent withdrawals, it went into a debit balance, and the banks did not notice it for quite a few days. They noticed it after 4 or 5 days only. So, although we had automation and it was supposed to help in early detection, it has not happened because the monitoring was not inefficient. It was not efficient. They were lax in checking the accounts and drawing their conclusions. So that's the reason why this fraud happened or not. So we need to ensure that not only automation is put in place to detect early, but the monitoring of that should also be efficient, fast, quick. And then certification is something which you should appreciate, which you should accept with a pinch of salt. People may claim so many things, but then the certification which we are talking about, the PCI DSS, is a point in time certification, meaning the auditor goes at a particular point of time and then he checks what is the status. Are they maintaining this register? Are they maintaining this setting? Is this system separated from that? Those kinds of things they look in and do that. It does not guarantee that once they leave the place, the same kind of regulations, the same kind of security precautions are strictly followed. So generally, when the audit is happening around that time, everyone is pretty serious about it, and then they follow the rules, principles, everything. But then subsequently, they may relax that. So that's another problem with the certification. So now they have different sets of certifications which have different ways of evaluating. They do continuous evaluation of things and all have come in because of these kinds of incidents. Let me now take you to, again, another thing which happened in India. We are looking at the third case. Madam, we go on till 5:30 or what time?
Sir, 5 o'clock, and then we will have the question session, sir.
Okay, so which means I have
Is that
about 10
possible,
minutes.
sir?
Maybe, yeah, it's possible. Maybe we'll take about 15 minutes. I have 10 minutes for
Yes,
5.
sir. Yes, sir.
Maybe
No
we'll take-
problem, sir.
Yeah,
No problem.
fine.
Yeah.
Okay, right. We look at this case. This again is something which hit the headlines in recent times. The earlier two cases, probably the first case, none of you would have been would have read about it, would have known that. The second case, some of you may have 2012, 2013. Some of you may have read that. This case is much more recent origin. It happened only about 2-3 years back. So many of you should have noticed it in the papers. It really hit the headlines, and it shows that this particular case shows that 2 billion fraud in PNB fraud and all. Let's look at that. Early in 2018, PNB, Punjab National Bank, it used to be India's second biggest bank, biggest public sector bank after SBI. They disclosed a massive fraud. They said that they have suffered a loss of around 12,000 crores. This 12,000 crores is after adjustment of some of the seized money, some of the rejected transactions, and some of the assets which were attached and all that and all. So 12,000 crores, they said that they have a big loss, and CBI registered a case for that and all. And they said it was done by Nirav Modi and his companies. Nirav Modi, his uncle Mehul Chokshi, his own family, Nirav Modi's wife, and a couple of other family members, they were all involved in this. They had a whole host of companies. They had those companies operating in India, Hong Kong, USA, UK, multiple countries, foreign countries, and all that. So once the fraud was reported, both Nirav Modi and Mehul Chokshi fled. They are still abroad. They have taken refuge. Nirav Modi is in UK, and then Mehul Chokshi is somewhere in the West Indies, and they have still not been brought back to the country, although we are trying to do that and all. Between March, according to Punjab National Bank, between March 2011 and May 2017, approximately 70 to 74 months, uh, over 1,200 LOUs, letter of undertakings. We'll see that in the next slide. I'll explain that they were issued. This is what they disclosed, and say because of this they incurred a loss of over 12,000 crores. That's what Punjab National Bank stated. Now, how did it come to light? It has been happening over 6-7 years, and then nobody noticed it till early 2018. How did it come to light? It happened that one of Nirav Modi's firms, they approached Punjab National Bank's Brady House branch. This is in Bombay. It's one of the biggest branches dealing in diamond-related advances and things and all. They went to that branch and they asked for a bank guarantee. Okay, what is typically otherwise used to be called as a letter of undertaking. The branch official who was handling the request, he insisted on 100% cash margin, which meant that if somebody wanted, let's say, a guarantee for $10,000, $10,000 is equivalent in Indian rupees today to about 8 lakh rupees. So the person who is asking for the guarantee has to deposit with the bank 8 lakh rupees, or even maybe a little more also, 8 lakh rupees, and say that this is the margin against which the bank would issue the guarantee. This was done because if something happens and the person does not pay back the money, then the bank could use the margin money to set it off against that. So that was the purpose of this. So the bank insisted on 100% cash margin. But then the firm said that, no, we have never done this before. We have been taking this for so many years and we have never gave any cash margin in the previous years and all. So that is when the official filed a report with the bank management saying that this is what has happened. Then they started investigating it. How come these people never paid any margin earlier? And then they looked into it. Then they realized that so many guarantees, letter of undertakings have been issued. And then everything started coming out. All the malicious activities came out and all. And that's how the fraud came to light. What happened? What is the modus operandi? The way the fraud happened was that there was collusion between some of the officials in that particular branch, the Brady House branch in Bombay, which we talked about, and Nirav Modi's company's officials. They were all together. Obviously, the bank officials were probably getting extra income out of this. They were getting gifts, they were getting money, all those things were happening. Probably some foreign trips were also funded by the companies. So there was a thick collusion between the two. So these officials used to issue letter of undertakings without any permission from the management, and they used to issue it through SWIFT. So there are two things we need to understand: what is SWIFT and what is LOU, letter of undertaking. SWIFT is an international communication network, Society for Worldwide Interbank Financial Transactions. Okay, it is a automated system which connects the banks, central banks, commercial banks, insurance companies, broking houses, those kinds of financial entities dealing in the securities market across the world through an electronic network. And this was introduced way back in the 70s again. And at that point, we had SWIFT coming to India only in the late 90s. Around 97 is when SWIFT network started operating, services became available in India. Till then, it was not there. So the unique feature about SWIFT is that it is an electronic network and it has got highly structured formats for reporting different types of transactions. Each used to be called as a message type. So you had message types for remitting money, you had message types for letter of credit, you had message types for gold dealings, those kinds of things were there. And each within those types, they had within those classes of transactions, there are definite types: one for remitting money, one for making changes to that, one for withdrawing the transaction, one for acknowledging. Those kinds of different message types were there. Each message type was identified by unique number. It had a number of fields. Each field had strict validation rules. So if you had to put in the amount, there were some rules saying what is the currency to be put in, and what is the currency code to be used, and what are the dates of the transaction, and what is the charges to be levied on that. All these things were strictly coded, and there were proper codes and validations in that. The whole idea was that the message, once accepted, can be automatically processed by the computerized system, and it could be handled automated. You don't have to do manual intervention. That was the idea. And Swift network is known for its security. Okay, they have never been breached, in the sense like somebody has never got into the Swift network of the core network of the Swift operations and made any changes. That has not happened at all. So this is used by Indian banks also for advising customers, for advising their banks abroad about money remittances, about letter of credits, about the guarantees they are issuing, all these things. So that is the Swift network which is used in PNB also. A letter of undertaking is a letter given by a bank to a foreign bank saying that they are issuing this guarantee on behalf of a particular customer for a certain amount. It says that if that customer does not pay that money, the bank would pay. So if suppose Nirav Modi wants is given a letter of undertaking for, let's say, $10,000 to, let's say, some bank abroad, it means that the other bank will now have an assurance that if they give $10,000 credit to this person, then if he doesn't pay back, the bank in India, Punjab National Bank, would make good that money. It is a guarantee. That letter of undertaking is a guarantee. But then for issuing that, there are proper processes. It should be treated like any other loan proposal. The customer should be appraised, evaluated, and his financial position studied, and then he should give margins, and then it should be sanctioned and it will be issued. But in this case, the officials who were in collusion with Nirav Modi and his companies, they directly entered this letter of undertakings in the SWIFT system. Okay, so which means what? The message goes to the other bank. Nobody in the bank, in Punjab National Bank, knows about it except those officials who put it into the SWIFT system, and only Nirav Modi and his companies, they will know this. And then on what happens is, on the due date, suppose you issue a letter of undertaking, and then based on that, the bank abroad, it gives a loan of $10,000 to Modi, saying that he should repay it on, let's say, 30th of September 2022. He should have repaid that. On 30th of September 2022, he doesn't have the money to repay that. So what he does is, he goes again to PNB. They will issue another letter of undertaking for a bigger amount, because the $10,000 which he borrowed will also carry some interest. So they will issue for a bigger amount, and this would be on a different bank. So Nirav Modi and his team will go to the other bank, borrow maybe $12,000, and then use that money to pay off this loan. So it means that they were completely rolling over the borrowings. And the beauty is, these were being done through foreign branches of Indian Bank, which means that somebody like Axis Bank, or somebody like Bank of India, or somebody like Bank of Baroda, they have branches abroad. They have branches in Europe, they have branches in US, different countries. So these Punjab National Bank, these officials in Brady House branch issue this letter of undertaking through SWIFT to the other foreign branch of the Indian Bank, and then that bank gives a loan to him there, and the fraud continues. That's how it was happening. Now, what went wrong in all this? Finally, it came out because somebody stood his ground and said that no, you have to pay the margin. He went by the rules, and so it came out. But then, what are the typical things? Why did this fraud happen? Why did this scam hit Punjab National Bank? What went wrong? Basically, the SWIFT system expects that the messages are handled by multiple persons. So, which means that when a message is originated, meaning a message is input into the SWIFT system, please remember, SWIFT is only a messaging system. It does not do the actual financial transaction. That is done separately by the banks based on this message. Based on these contents of the message, the individual banks will be passing their accounting entries and doing the financial transaction. But the message itself is only a bearer of instruction. Okay. So the SWIFT system expects that any message which is input into the system will have one person originating it, creating it, another person verifying it, and a third person authorizing it. So only when it's authorized, it gets pushed into the SWIFT network and flows to the other bank. That is the way it happens. In this particular case, in that branch, The same person was handling all the three roles. That's a major problem with them. Then the logs were now the SWIFT system. Whenever some transaction takes place, it prints out a log also. It says that such and such transaction done from this terminal by this user, all that. And these are supposed to be verified by a different official at the end of the day to make sure that all transactions are genuine and accounted for. But that was not being done properly. Then the transactions were not being posted in the core banking. Now, what does it mean? It means that when you issue a letter of undertaking, you have to pass some accounting entries. Okay. And those entries have to be put in the core banking system because, like I said, SWIFT is only a messaging system. The actual financial transaction has to be posted in the core banking system, CBS. This was not being done. The transaction was also not flowing automatically from the SWIFT system into the CBS system. So because of that, we had this problem. It was never detected in the CBS. Then Nostro account reconciliation. Nostro account is an account which one bank in India maintains with a bank or a branch in a foreign bank in a foreign country. So Punjab National Bank would be maintaining an account with different banks in foreign countries. Each of that is a Nostro account for them. So whenever a bank abroad issues a loan based on a letter of undertaking, that money is credited to the Punjab National Bank's Nostro account. And when the loan has to be repaid, that account instruction is received, that account is debited and paid to the loan. That is how it is done. And here in India, each bank will have a mirror account of that Nostro account. So the Nostro account is with the foreign bank, and a mirror copy of that is maintained by the bank in India. So whenever a transaction happens abroad, a similar mirror transaction is done here in India also. So at any point of time, the balances in the two accounts should ideally be the same. What is abroad and what is in the mirror account should be the same. If there are differences, they need to find out. Maybe some transactions have hit the foreign account, but they have not hit the local account. Some have hit the local account, but not the other account. And some charges should have been debited. Those kinds of things in there. So they have to do that reconciliation and account for the differences. This was not being done. Every time an LOU was being issued and then the loans were given and the money was getting credited or debited to the Nostro account, but it was never reconciled. Then the person who was doing the SWIFT messages in the branch was the same person. He was doing it for many number of years, same seat. He was not rotated to some other seat. Generally, that's a very important requirement in banking. The people should be rotated among different seats so that any misdeed done by one person in one seat will come to light through another person. That's one. The audits also, they had annual audits by the statutory auditors, periodical audits by internal auditors. They have concurrent auditors who audit transaction by transaction every day as they occur. You have the other surprise audits. In spite of all this, this was not detected, which meant that the audit process was not very efficient. So what we learned from this is that obviously one is that staff rotation has to be done, and compulsorily the staff must be asked to go in sensitive seats, have to go on vacation. This is something which RBI has brought in and it is being done now. Monitoring of lifestyle of the staff. The staff members, like even in the very first case which I talked about, the State Bank case also, the staff members who are committing these scams or frauds, they live a very luxurious life, and that is never noticed. In fact, banks are supposed to monitor that and see that the staff live within their means. So if that is not done, this problem will happen. Integration between CBS and surround system, like integration between CBS and the SWIFT system is required so that transactions automatically flow in and nothing gets omitted. Internal processes like checking those transaction logs or making sure that the reconciliation of the Nostro account is done, all these should be strictly enforced. If you don't do that, then these problems would come in. The audits have to be done professionally. They have to analyze the data. In this particular case, the bank was making a lot of income from one particular client, huge amounts of income. That branch was making it, and there were big spikes in the balances. Large balances were coming in the account suddenly and then disappearing. All this, nothing was noticed. They were not really being tracked. The auditors also did not analyze this. So these are some of the learnings which we get from this. I think, okay, next couple of minutes we will finish this. The fourth one I'm going to talk about is again a foreign bank. It's a bank called Barings Bank. It's a 200-year-old bank. It was headquartered in UK. It was said to be the banker for the English Queen, Queen Elizabeth, supposed to be the banker to the Queen. It declared bankruptcy in 1995. A 200-year-old bank declaring bankruptcy in 1995, and it was sold for a token value of $1 when it declared bankruptcy. That's what happened. What happened was this bank was having Singapore operations, which was doing securities trade. Securities trade meaning investing in the stock market, investing in shares, investing in options, investing in futures, those kinds of exotic instruments, and then making money out of that. The trader who was doing it was called Nick Leeson. In fact, they have referred to him as the rogue trader. He himself has written a book on how he did this and what happened and all. He kept hiding losses. He had a dummy account in the accounting system. It was an automated system. He had a dummy account. He had given it the number 88888. And this has gained notoriety after that number. So whenever he incurred a loss, he parked it in that dummy account, and it was not part of the P&L. It was not part of bank's profit and loss GL head. So it never got involved included in that. And then he used to fudge the rates, meaning that a trade deal would have been done at some rate, but he actually input a different rate in the system. And he also put in some trades into the system which actually did not happen. This was more to book show some profits and all. So these things happened. And one day, finally, he realized that the losses had become too much. This was after 1995. There was a massive earthquake in Kobe, Japan. And he had invested a lot in Japanese market. And because of that earthquake, the market got severely affected and he suffered huge losses and he could not make it up. So he quietly faxed a resignation and left. Then they started investigating and they found that the bank had run up a loss of 1.4 billion, which effectively meant that entire reserves and capital was all wiped out and the bank was bankrupt. So they had to declare bankruptcy. And Nick Leeson was arrested while he was flying away from Singapore, and then he was sentenced. The learnings from this is segregation of duties is a must. Nick Leeson was doing all the activities relating to the trade deals. He was originating deals. When he was striking deals, he was talking to the different parties and saying, I will buy or sell this, all that. And he was settling the deals. Where payments were involved, he was doing the payments for those deals which he had struck. He supervised the accounts, meaning he was the one who checked the accounts and made sure that things were okay. So that is why he could put in fraudulent deals, he could put in incorrect rates, all those, he could pass them off to the dummy account, all that he could do. And banking essentially requires healthy mistrust among the people, meaning that you trust your employee, but you always verify what is happening. So every person in the bank can trust his colleague, but at the same time, he should verify. So the motto should always be trust but verify. And there were when somebody shows, I'm putting this because when Nick Leeson was showing consistently profits and profits and profits, only profits and no losses, and if at all losses, very few, very minor losses, and the profits were growing steadily, somebody should have got suspicion. For a normal trader, it's not possible to consistently make profits. Over a period of time, he can make net profit, he can make good profits, net of all the losses and things and all, but then he can never consistently make only profits. So this is a warning signal which they missed out. That's why I said that they were all so happy with him, they trusted him, they never bothered to question him. That's how the fraud came to take, the scam occurred. Let me just give a few closing remarks. What we have seen is just a few samples. There are much more to this. Like I said, for every scam which happened abroad, there is a mirror scam in India. For everything which happens in India, there are equivalent scams abroad. So, for example, in India, we have had huge frauds involving PMC Bank, Nedungadi Bank, ILFS Bank, that is there. Globally, Bangladesh Bank, their SWIFT network got broken in. Somebody entered into Bangladesh Bank network, stole the administrator and other passwords and identities for the SWIFT network, connected to SWIFT network and posted fraudulent transactions. The bank would have almost lost 1 billion. They managed to escape with a couple of $1 million losses and all. Then you have large jewelry borrowers in Chennai itself going bankrupt. Lot of inoperative accounts on which there are no operations because the owner has died or the owner has moved out to some different country, things like that and all. So their accounts have been withdrawn through misrepresentation. There are lots of scams happening. These are things which happen. But in all this, there are some of the common points are there is collusion between the staff and customers. The audit role is not very well performed. The audit is done superficially. Even external auditors get compromised. That's what we have seen in the ILFS case in India. We place too much faith in automated systems. I do not know if you receive bank statements from your banks. You would find a computerized statement at the bottom. There is a statement. This is a computer generated statement, does not require signature, because they believe that the automated system is infallible, that there can be nothing wrong. That is the farthest from truth. We should always look at automated systems with suspicion and verify things and all. And when you have multiple software, like you have CVS, you have UPI system, you have a credit card system, debit card system, you have loan origination systems, all these systems, or you have the securities selling and buying systems, all these things must be integrated with the bank's core banking, because that is where the actual financial transactions take place. The bank's balance sheet comes out of the CBS, so it should be integrated with that. And please never forget, you need to trust but verify. But then the biggest threat of all these scams is that people have insatiable greed. They want more and more of money with less and less effort. That is the one which leads to many of these scams. I think I would stop with this, and I would be happy to take any questions which you may have. We had packed in a lot of banking information also. The idea was to get you familiar with many of those things.
Sir, can I ask one question, sir?
Sure, madam. Go ahead.
Sir, I have a doubt. Is there any possibility a public or a customer of a bank can find out a scam which has been going on, or it is going to be done in a bank?
It is possible. I mean, so far I am not aware of any case where it happened. Usually, it is a staff within the bank who will get an inkling of this. Okay, because they will find suddenly some big transaction is coming, or somebody has become secretive about what he does, or somebody doesn't allow them to do something. That's what happens. The customer coming to know would be an extremely rare occurrence. Like there are, for example, there are people who take part in lot of blogs, who take part in lot of internet groups, discussion forums and things and all. They might come across some information there, or they may by mistake, by oversight, receive some SMS message or some email. Okay, it happens. None of those fraudsters or scamsters are also foolproof. They do commit mistakes at times. So by the chance something lands up here, they might get that. That is possible, but it's extremely rare.
Okay, sir. Thank you.
Yeah.
Sir, good evening, sir. I have a question. Sir,
Sure.
what is the consequences of these bank scam to the economy, sir?
What is the consequence of these frauds?
Yes, sir.
Okay. See, the one consequence is, like say, for example, in the Punjab National Bank case, the bank is supposed to would have probably contributed a much larger profit to the central bank, to the central government, because the government holds a lot of majority share in that bank. So the profits would have gone to the bank, and the government would, to that extent, be able to reduce on, let's say, taxes or some other ways of raising money and all. So that's one impact. Second one is the customers who hold shares of that bank, they have lost money. Okay. The share which was quoting around maybe 200, 300 rupees, because of these scams, it falls down to about 70 rupees. So because of this, they lose money. The customers lose money. The third one is the bank itself suffers because of in their credit rating. Because of these frauds, their internal systems are weak. So the banks would be rated by credit rating agencies, somebody like Standard and Poor or CARE or CRISIL, at a much lower level, which means that when they want to raise money in the market, their interest rates would go up or down. So these are some of the consequences. They will not be able to lend money more to the requiring customers. So which means that the industry may not be able to get as much finance. Somebody who has been with Punjab National Bank for a long period, he is now wanting more money to expand his business. He will not be able to get that one. So these are some of the consequences of a fraud which happens in a big bank.
Thank you so much, sir.
Yeah. There is a question which says that After all these improvements with the bank, as per case study, banks learn well and they are alert, I hope. But my doubt is, after this, no scam will happen. No, there is no guarantee. Frauds and scams have been happening from days immemorial. For example, we used to hear about called the tulip bubble fraud. It happened in Holland way back in the late 1700s. So suddenly tulip became the fancy thing to hold, and its value was going up and up and up and up. And suddenly one day, people realized that there is no value in that, and everything fell, and people lost money. And today the same thing happens. Some stock value gets boosted up to a huge value, and then suddenly the thing goes. And then, for example, the famous Harshad Mehta scam which happened in India, it hit a lot of customers, it hit a lot of banks. The values go up, and so systems will improve, but the scamsters will always find out some way of beating that. And more importantly, the people who monitor the systems, who manage the systems themselves, are human and are fallible. They can fail at times, they can overlook something for various reasons, either tiredness or overwork or simply too much of trust in the others. It's possible. So because of that, fraud will continue to happen. But what will happen is the scams will continue to occur. What will happen is they will get detected much faster. The bigger scams will be probably fewer in number and probably will get detected much earlier, and people will be more cautious. That's what will happen. There's one more question. Who will monitor the lifestyle of staff? Okay. See, I do not know the current position. Earlier, during my working career for a long time, the managers had to certify. Each branch manager had to scrutinize the staff accounts. The staff accounts used to be kept in separate ledgers, meaning they were segregated. Today, with the computerized system, it's far easier. You can easily identify which are the staff accounts, and you can do extracts based selectively, looking for transactions beyond a certain level or credits other than salary. Those kinds of things can be done. The managers have to scrutinize, and they have to certify saying that they have done this and they do not find anything abnormal. Or if you notice, some staff member would notice that this particular employee is throwing lavish parties, or he is buying a big car which is very costly, or he is buying a big house, all those things, that should be brought to the attention of the local managers, or the managers themselves would probably be noticing it, because they themselves would get invited to many of those functions, and then they will have to take a call on that. So this is something which has to be done consciously by not only the managers, by almost every staff in the bank.
Thank you so much, sir.
Yes, madam.
Sir, can we go on for vote of thanks, sir?
Yeah, sure. I have. If you don't have any questions, we can go on. No problem.
Yeah. Yes, sir. Yes, sir. Definitely, sir. Thank you.
I'll stop sharing my screen. Yeah.
Yes, sir. Uttara, you can start the vote of thanks.
Madam, 1 minute.
Yeah,
Would you
ma'am.
require this?
Yeah.
Would you require this one
Yeah,
PPT
sir.
to be shared with you?
Yes, sir. Please share with me, sir.
Okay, sure. I'll send it.
Yeah,
across.
definitely. Yeah, thank you, sir. Thank you so much, sir.
Thank you, sir. I deem it a great honor
Thank you
and
so much.
privilege to propose the vote of thanks on this memorable occasion. Let me first start by giving glory to the Almighty for making today's webinar a resounding success. I, on behalf of the Department of Commerce and the entire Krishnaswamy College for Women, would like to acknowledge our gratitude to our guest speaker today, A. Vijayakumar sir, for this wonderful webinar. A big thanks for your efforts towards this session, sir. We are really enlightened with your knowledge and presence, and I also extend my thanks to our Dean ma'am, Principal ma'am, and HOD ma'am, and other staffs for their valuable contribution, guidance, and encouragement. Last but not the least, I owe my heartfelt thanks to our students for active participation. With these warm messages, we come up to the end of today's webinar. Thank you, sir.
Thank you. Thank you all. Thank you, students.
Thank you, sir.
madam.
It was a very
Yeah.
excellent session, sir. We got good
you.
messages and good knowledge from you, sir. Thank you so much.
Okay. Thank you,
Yeah.
madam. I'm
We
logging
will
off.
Yes,
Yeah.
sir. Thank you, sir. Thank you.
Sure.